Hi, everyone. Hello, Brock, Kevin, Ben, Anaya. How are you? Everyone doing okay? Hello, Shepard. So let's have a good week, everybody. Looking at this Dixie here, go back a whole month. Hi, Didier. We've really been in 100-point range for over a month in the Dixie. Still could be vulnerable to, attack this low here. I'd say over 97.20, right over here, which happens to be 97.10, 97.20 is when you have to start being concerned about the dollar turning back up, which the implications of that. So as long as the euro is outperforming pound, though, I don't think you have to worry about that. I think you have to worry about that when the pound is outperforming euro. So you may want to write down this number. I think it'll be a big one this week, 97.10-ish. Pay attention to that for risk off. Okay, so far, as long as the dollar is not going anywhere neutral, the market, S&Ps, probably have no headway. Look at this in the S&Ps, so, okay, new highs. Of course, we're not at that 3260 level up here. We don't have to take it out. And if you look at some of this RSI stuff here on the 4-hour, of course, NAS has a better RSI structure because it's been overperforming, but you look at the S&Ps here, and some of the divergences worked for, some of these trades last week, especially this one. And again, the same level, 3100, is really the bull bear line on this, in my opinion. And so here's a 2-hour still diverging. You could almost see a little 1, 2, 3 here. Maybe it shows up better on the 1. There you go. Everyone see that up there? See a little 1, 2, 3 at new highs, under 70. I know it's a short-term chart. It's a 1-hour chart, but if I was long, I'd be liquidating. And, we could still be good and break all the way back down to 3160 and then go again. So I think that it's starting to pay to trade this stuff instead of just hold this stuff, because even though we are on a tear, it's becoming a little bit more two-way. Looking at the oil still hasn't made a new high over 4160, but this action Friday surprised me. I thought that we would get a rally back to 40 and come back off. So I don't know, maybe this is a bull flag and we're going to go again, but certainly was hard to go home short crude last week. I want to talk about something for a minute too, a little bit of coaching. If you were selling crude when I was talking about it last week at 40.60 and you let all this happen and didn't ring the register, I think one of the primary rules is not to let a winning trade turn into a loser. And I only know a couple of ways to prevent that. And that's a willingness to take profits on part of your position when it goes your way, like a buck in crude. You got to ring the register. If it keeps going, yeah, you may not be as short, but if it does this, you have money in the bank. Okay, so just a little coaching. You have a big lead, or even in currencies, you have a 40, 50 pip lead on a position. You have to take a piece of that off and then tighten up your stops. So it's just money management. Do not let winning trades turn into losers. At the worst, they should be break even. Say, for example, you have a 50-point lead, but you don't want to take it. That's not your style. You should at least go to a BE stop so that even if you give up that 50 pip lead, you're not in a 50 pip drawdown. I'm not saying that's not going to come back and pick off your stop and then go in your direction. But I've seen a lot of people do that. And I've also seen a lot of people with limit orders trying to get out of a position, and the limit order is within about 10, 15, 20 pips, and they're just sitting there waiting for the limit order to be filled, go to the market. Okay. So they're looking for another 10, 20 pips. They haven't moved their stop. So they're risking, 40, 50 pips to make another 10 on a limit order exit. Doesn't make sense to me. So just a little, basic money management things for people to think about in here. And we'll see what happens this week. Gold, this looked like a flag. Looks like we should get new highs. I'm hearing people talk 1840 now. So even though we got this 1820 stall was, as Steve would say, purely corrective, you have a confirmed high in the gold. So I think we're going to get another high. We've almost done it in silver, haven't we? Have done it in silver. So the gold silver ratio still working to the downside, and I thought we were getting close to a bottom in that, and here we are. Okay, cutting through these moving averages, cutting through this low. If I go to like a 4-hour time frame, still, still looks like it favors silver. No divergences there. And I just want to warn everybody, my guest today is X-rated if you're bullish the economy. And, like a lot of people say, if, you don't want to hear about the other side of the coin and what the possible outcomes are with what's happening in our unprecedented times in the economy with the pandemic, etc., you're going to want to turn the sound down. So Thomas will be with us later at the top of the hour, just warning people if it bothers you to hear about bearish and potential real negative consequences for this and what it might mean for your future, don't watch it. Okay. So there's your warning. And now I say, after a warning, good morning to Blake Morrow. How are you today, buddy?
Hey, good morning, Coach. How's
God,
it going?
it's so hot even here in San Diego. Blake, I know it was 118 there yesterday, but
It's crazy.
it's
Yeah,
100 here, bro.
yeah. I mean, it's just not it's nuts hot. Yeah.
Yeah,
But anyway, I can sit
yeah.
here and complain
All
about.
right.
It is normal for me to complain this time of year about the heat because it is
Yeah,
ridiculous outside. But
yeah,
anyway,
yeah,
it's been. It's been a grind higher overnight. Nasdaq, as you guys, if you haven't missed it or if you haven't seen it, the Nasdaq's kind of grinded it to new highs overnight.
Did it
We've
get to
got
that level that you were showing on the chart of the day, Blake? The other day, it was just above where the NASDAQ high was last week. You had some type of, I think, fib extension
Oh, you know
number
what?
above
I
it.
think what it is I was drawing like the distance from the 200-day moving average, and we're far. We just continue to rock right past that. I mean, if you look
Yeah,
at, I mean, here's the furthest we were away from the 200-day moving average on the downside.
yeah.
And we just, I mean, last week we were right here, and then we're just still going. I
Okay.
mean,
Yeah,
you can try to chase the market higher, I guess. You can't. For me, it's one of those situations where I look at the market and I go, well, it's too overbought to be bought, but it's too strong to be shorted. That type
yeah,
of thing,
yeah,
and that's the way you got to approach it right now.
yeah,
But it's dragging the S&P higher, and you can see the S&P is breaking out. And as I mentioned in the week ahead video, um, equities are strong, risk appetite is strong. It's hard to fade. So I don't know what's going to turn it lower. But the problem, like with currencies, is it just we're stuck in a
range.
situation where, well, you call it a range or whatever. We're
Yeah,
just kind of in a we're in a situation where it's just we're grinding. You know, currencies are just kind of in a grinding mode right now versus rally mode. We're just, you can see, like, in a lot of currencies, like the euro's trying to push higher, but it's not like exploding higher with equities. You know, it's just kind of, you know, trying to slow, you know, it's like the dollar's slowly grinding lower. I mean, we have the Aussie, which is, you know, up. Whoops, that was the Kiwi. We have the Aussie that's up near the resistance, but you know, how many people right now are long the Aussie dollar and thinking, damn, you know, with the Nasdaq up at new highs again, why isn't the Aussie dollar, you know, trading above 70 cents? I mean, that's got to be, you know, some, you know, frustration, if you're long Aussies right now. I'm not saying that it won't go higher. I'm just saying that it's got to be a little frustrating that it's not blasting higher. The Kiwi was down earlier, but you know, it's back up against resistance. And you know, by the way, the lines that are on there are the ones that I was drawing on the week ahead video, because you know, I was just looking at the daily charts then. But we're, you know, the Kiwi is in breakout territory for all intents and purposes, but is it, you know, really broken out? Are we above 66 cents yet? No, we're not. So again, this is like one of those situations where you know how it is, Dale. You go and you get long or short something, and it doesn't move, right?
Yeah.
Like, yeah, like everything that you're trading, everything that you see points towards, you know, a continuation of whatever you're trading, and it's just not going. So that's
Well, the Dixie's
probably,
been in 100-point range for a month.
yeah.
Basically
Well,
96.50, 97.50.
yeah, I think the dollar index is just kind of still sitting there. You know, we, like, if you look at the euro intraday, and Amanda was pointing this out in the dollar index. I mean, we might have a head and shoulder pattern here with the euro. I mean, now keep in mind that the euro, we are dealing with the, you know, the ECB. Here in a little bit, we have the ECB that's gonna, you know, that's got a uh, that's going to meet this week. We have the European Council meeting. So the euro might struggle a little bit here, but ultimately the euro is going to be moving based on what, you know, the euro is going to be moving based on what risk appetite's doing. And so for the most part, because when stocks move higher like they are, you should have dollar weakness, and you know, the euro should be, you know, pushing higher. But we are struggling as we approach this 113.50 level. And I mean, if last week it was this situation, you know, you bought the euro above 113.50, and then, you know, by the end of the week, you know, it's got slammed back down again. It is a little frustrating in the FX market, because we're just not seeing that follow through. And that's, you know, that's kind of not just the issue with the euro, but that's the issue with a lot of different currencies. Dale, you still here?
Hi, yeah. Good morning.
Oh, good morning, Stelios. So yeah, I was gonna say Dale's not here anymore. But gold, you know, continues to move higher, and so does silver, right?
Yes, and we like that.
And why wouldn't they?
Yeah, right. Exactly. Why wouldn't they? Hey,
But Blake, just look at how they flash crashed this market again during illiquid hours.
Did this happen at the
Yeah.
open?
It did.
Oh, okay, I wasn't watching it at the open. I wasn't, you know.
It did.
Wow. So they actually had it trading at 18 and a quarter. And then,
Yeah.
wow.
And then move the dollar higher.
Wow.
You know, it would be funny, but this thing happens so often, and
so often, yeah.
We've talked about this. You know, guys, I used to be a market maker. This is not what you want to do when you want to get rid of a big position. It just doesn't make any sense. So why is this happening? Anybody who knows, please let me know. You know.
Yeah, well, you know, I mean, maybe it's just that, you know, it was just mispriced, you know, pre-market, and then as soon as it opens, people are like, you know, they take advantage of it. I wasn't watching precious metals right at the open, so So I'm
Yeah.
not 100% sure. But let's also talk that silver is right up against this major, what I consider major resistance. This is that big channel. Now, I may, you know, maybe I misdrew this, but I think this is it. You know, I think this is where we're, you know, this key, really, that it's been holding us since 2014. And you know, Stelios, how many times have we been up at these levels and you know, we roll over, right?
Yeah, absolutely. And I think this time might be the same, because it might coincide with some kind of, you know, COVID-led news or something that bring equities lower, hence dollar higher and precious metals lower. You never know, but it just has this feeling again. But definitely it is getting up there to that trend line. That's for sure.
So you just said something that's really interesting. Maybe COVID-led move lower. What we've seen precious metals, and I know we've all talked about this, Steve. We talked about this. You know, precious metals are moving with risk. You know, what's to say that we don't break away from that if we see some, you know, move lower in equities, that, you know, people actually start running towards gold as a you know, as a safe haven product.
Yeah, I agree with that 100%. I think this time the sell-off in metals in March was quite brutal. I was long silver and I was suffering. I didn't cut any, thank God. But I think if it happens again with equities, the sell-off in metals is going to be a little bit less severe. Just my humble opinion. Maybe it's because I'm still long, but I think that's what's going to happen. I agree with you, Blake.
It's
Okay,
it's what they call throwing the baby along with the bathtub water. What
Yes,
happened
right.
in March and precious metals.
Yeah, so they threw out the baby with the bathwater. That's
Yeah.
right. All right. Well, you know, these precious metals are obviously you know, really strong. You know, and I was going to really quick just take a look at some of these currencies, because you know, the euro, like I mentioned, you know, we're just really struggling up here around the 113.50 level. I really want to be long the euro, frankly, but it's a tough long because it really isn't giving us that signal that it wants to move higher yet. The cable's under some pressure today, and I'm not really too sure what's leaning on the cable. However, as you know, I've been mentioning that we're knocking our head up against a major trend line here in the pound. So while the pound is below 127, I do expect the cable to move lower. But the thing is I'm surprised that it's, you know, it's moving lower as the rest of the dollar pairs are just kind of moving higher. So that's showing you this really relative weakness in the cable right now. The Aussie is, you know, as I mentioned a bit earlier, the Aussie's higher, as you would expect with stocks where they're at. But the question that I'm asking, and I'm sure everybody else is asking, is why hasn't the Aussie broken out yet? And maybe it will. Maybe it's, you know, it's just kind of preparing to break out. There's I'm going to go back to this daily chart, and this is something that I talked about on, I believe I talked about it on the week ahead video. My weekend was a little, I have to say it kind of ran together, because I did get up early Saturday morning at 3 something in the morning on a Saturday morning to do this event with that was hosted by Pepperstone Securities. There was a few of us that were on that. There's like 6 of us, and I can't remember if I talked about the Aussie then or the week ahead video. But you know, the Aussie, what I really love to see in this particular pair is I would like to see it pull back from these levels, and I'd like to see it pull back towards the 200-day moving average, if not, you know, that blue support, you know, around here, around the 66.50 to 67 cent level, and then eventually do a big inverted head and shoulder breakout. Because I actually look at this, look at the Aussie dollar more on a weekly basis, and I think this is a false breakdown, right? It's a false breakdown that should lead to a breakout. But currently, this isn't giving us a signal that it should be shorted at this time. I'm hoping that it rolls over. You know, and the only way it's going to really roll over is going to be with some, you know, downside in equities, I assume, which obviously as of right now, we're not getting that. But that's what I'm really hoping this happens. I'm planning on this for happening. But at the same time, I can't ignore the fact that we could just break out too. You know, we obviously can. You know, you'd have to kind of rewrite everything and say, okay, well, if it just does break out right now, I'm gonna draw this. You know, we have this inverted head and shoulder pattern that just takes off, and it doesn't give us that you know, that more symmetrical look that, you know, I would be. I typically would love to see more symmetry here, technically, but that doesn't mean that we're going to get it. You know, just because I was saying this on the webinar this weekend that I did, the event that I did, is, you know, what I want in the markets and what I get, what I end up getting, are, you know, can be two totally different things. I try to envision things happening, but doesn't mean that it's gonna play out that way. But that's what I ultimately would like to see is, you know, a reset back towards the 67-cent level. But like I said, you know, we may not get it, and it's been extremely resilient in both directions. It's been resilient in the fact that, you know, for bears, it hasn't broken out to the upside, but at the same time, it's not moving lower. So it's been holding up well. So the jury's still out on exactly what the Aussie wants to do here and what it's going to do. You know, I'm just kind of waiting for a pattern to develop is what I'm doing. So there's the Aussie. Kiwi's exact same situation. The only difference with the Kiwi is that the Kiwi is actually probing a breakout right now of that multi-year trend line. The dollar Canadian, you know, the dollar Canadian last week was really trying to move out of this descending channel. It hasn't done so yet. Dollar Mexican peso still holding up pretty well, considering. And you know, I look at the dollar Mexican peso, and it is up today, and we're near the highs. That's surprising given that stocks are as strong as they are at this moment. So, you know, okay, sorry, I just was reading something. And then, oh, one last thing I want to go over really quick. The dollar yen. I actually, you know, I think the dollar yen is on its way, you know, to moving lower. It's trying to like move towards the lower end of the range, which is 106. What I'm really interested in is the Aussie yen. Should we get to, you know, this 107 like 40 level? I think that's going to be pretty key resistance. You can see this little downtrend line here. I'm not super excited about trading it at current levels, and I don't necessarily think we're going to like 100 in dollar yen or 120 in dollar yen, but I think it could be sold, because there are a lot of people that as equities move higher, they expect the yen to move lower, and it really hasn't. I mean, this morning it is. It's playing a little bit of catch up, but I do believe that the dollar yen can be a currency that we look towards the you know, look towards the 107.30s, and we might be able to find some resistance up there around the 50% retracement. That's just something else that I'm keeping in mind. And also, you know, the yen, don't forget, also could have a little bit of a correlation with precious metals. Typically, when you know, the gold and silver markets are stronger, the yen starts to outperform. that hasn't really been the case, and we haven't seen that correlation in a while. But it's just something just to think about in case we get some volatility in the precious metals. But anyway, that's just a overview of the majors that I'm seeing. It's not, I'm not super excited about anything at the moment. That's not to say that we won't get some better activity in currencies, throughout the course of the day. But I think we gotta watch equities here. Equities continue to push higher. The S&P is, above this trend line. You can actually see that today we backed up a little bit, and it's just a retest of that broken trend line, and we retested it and held it. So as long as the lows are in for the day, at this 31.90. I think you got to remain bullish on risk. So, Steve, Stelios, good morning, guys.
Good morning again.
Good morning again.
It's
yes.
Groundhog Day again.
Yeah, it is Groundhog Day, and in my
one
world,
of my
really
favorite
is.
movies of all time.
Yeah.
So there's by the way, and I only know this just because of I use Hulu. You guys are familiar with Hulu, right?
No.
Me neither.
Okay, well, Hulu is a streaming service that has really taken over a lot of people like myself that we don't use conventional cable television. It's for you can do streaming. It's a streaming service, but you can pay a premium, which I do, and it's basically the way I get cable channels now, because I think my cable bill was like almost $200 a month in my old home a few years ago. And when I moved, I'm like,
Wow.
we don't even use it. We don't the kids watch some cartoon stuff or whatever, and that was back then. And so we canceled it, but I still wanted to have streaming service for some sporting events and whatnot. So I went this route, which I've been very happy with. But there's this movie on there, and I haven't seen it yet. It's called Palm Springs, and it looks like a redo of Groundhog Day in a certain respect. So I'll report back to you on how funny. It's hilarious.
Nice.
Anyway, because I love Groundhog Day. It's like one of my all-time favorite movies.
Yeah, it is amazing. Bill Murray at his best.
The part where he goes, I am a god, and she goes, you're God? No, not the God, just a God. I love that. Anyway, yeah.
Anyway, all right, guys. Well, we continue in this mode where equities are still very bid. I think Tesla's up another 5% pre-market, from what I hear murmurings about. I mean, I don't know what's going to stop equities, but they continue to move higher. Currencies are somewhat stuck, but I'm not sure what's going to dislodge those either. Because with equities as strong as they are, with precious metals as strong as they are, you would think that currencies would have moved a little bit more than they have. So, what's up with what are you guys thinking here?
Well, me personally, I say to myself, ignore the fact that we have COVID and all that in the background. If equity markets were moving like they are now, you see companies like Tesla or Nikola. You've heard about Nikola, right? Who are going to make these electric trucks. They haven't made a single one yet. And
they haven't made a single dollar of revenue, ever.
Stupid valuations. Anything that comes to market gets bought up straight away. It reminds me of 2000. It does. So even if we didn't have this background of uncertainty, I would be very skeptical. So even now with all this also existing, I'm just I'm not touching stocks. And I know, they keep going. I don't know what the catalyst is going to be. There will be one, just like there was in 2000, 2008. There will be one. And then I think we will see some kind of a correction. I don't know what you think, Steve, but it just scares me.
2% correction should be enough.
Sorry, how many? 2%. Yeah.
Yeah, right, exactly. Yeah. All right. Well, guys, I'm going to pass it over to you. For those of you that have not joined the ForexAnalytix community, make sure you do so. Try us out. It's only $1 for 10 days, but that's where myself and you'll see Steve in there, you'll see Stelios in there, but you have Amanda and Paulie. We're all in there chatting in our private chat room. So make sure you try us out. And guys, I want to pass it over to you.
Good luck today,
Thank you,
Blake.
Thank you, Blake.
Thanks.
Bye-bye,
Thanks,
mate.
Coach. All right. See you guys.
We have no data today. It's very
Hey,
quiet
guys.
day. Actually, hey, Dale, how you doing, man?
Oh,
Hey,
hanging,
Dale.
hanging.
We do have some data later today, which is interesting. Federal budget balance expected at somewhere around 800 odd billion for the month of June. This will be the biggest ever print.
Surplus?
Of course,
Yeah.
of course.
With
Only
the two-
surpluses.
Yeah.
with the two worst prints being the last 2 months and in history. So this is
Yeah, last month was 400 billion.
yeah
Yeah.
in a month. Anyway, this is obviously on the back of
Running deficits like they're going out of fashion.
yeah. This is all in the back of COVID measures, and they're giving away money basically. But
Well, there's 2 weeks left for them to extend all this stuff, guys, before they expire.
Oh, I'm
I
sure
think
they
they
will.
call it the Heroes Act.
Okay.
I'm sure they will. Ahead of
What
the
about-
elections, absolutely.
what about that debt ceiling? Have we reached that again? The debt?
What's
Well,
it?
No, are you stupid? They've suspended it, mate. They
yeah.
got bored of having to vote for a new one because with that pace, they would have to vote for one every single time they had a meeting. So the first
true.
subject of the meeting would be, should we extend the debt ceiling by another 200 billion? Yeah, done. Next day, okay, we reached those 200 billion. Can we extend it again? Yes, done. Next day, same deal.
Yes, this is madness. But anyway, like we said yesterday, on Friday, it feels wrong that if a government, let's say the U.S. government, they show any kind of fiscal prudence, that's going to send stocks lower, which is it feels a bit wrong, but it is that way.
So I'd say it's a unanimous opinion, just like Steve stated, in an election year that the president's going to push for more benefits. I think
Yes.
it would be a surprise if they let these expire. And what could happen is they let it expire and then they see the market reaction and then they pass it. So, I mean, that is a possible scenario.
Yeah.
We'll see. It's only 2 weeks away. So
One of our friends here is saying, "Tell us how you really feel, Steve." Yeah, we feel quite strongly.
I really
about that.
feel that the generation of our kids is really, really going to be in a very bad situation. I mean, the only thing that emotionally bothers me about all this is how unethical it is, because there is no problem that's being solved. There are just more problems passed on to the next generation.
Yeah.
And actually, our guest today, guys, is going to be talking about the Eurozone and the problems, besides the problems here in the U.S. He focuses on Eurozone issues. So you may
Is he
want to
European?
I think so. He spells his first name Tuomas. So what is that? A Spanish derivation of
Thomas
Thomas?
Malinen sounds Finnish. Sounds Finnish.
The last name sounds Finnish. Yes,
Okay.
absolutely.
Okay. Well, I'll be listening for sure.
Okay.
Okay.
I'll be listening too when I'm not interrupting him.
Okay. So news-wise, data-wise, very, very little. We had more numbers, COVID-related numbers, kind of coming out of the US. It's a bit of a mixed bag actually, because New York actually was good. They had no deaths reported yesterday, but Florida, I think, had their worst day or something like that. So the most ever cases for a US state in one day, over 15,000. And you have other countries taking measures. The UK, I was reading about Hong Kong, where they're banning eating at restaurants between certain times of the day, and they're doing all sorts of stuff. And I was also looking at, I don't know if you've seen this, Steve. I'll try to get it and post it. The chart for COVID cases in Croatia, which had a nice, a big bump, obviously, in March or whenever it was. And now it's just doubled that. It's gone ballistic.
Croatia also has a lot of tourism. So
tourism, yes.
yeah.
And that scares me as well, because, you know, we've opened up our borders for tourists. I think they're talking about now starting a check for everybody who goes in, testing.
Which, if you ask me, that should be the case since the very beginning. I mean,
I agree.
you know, it's
I
best
agree.
for everybody.
I agree. And nowadays it only takes under 24 hours to get results. So, you know, you
There are
stay
tests that take 1 hour, actually. Yeah.
Oh, really? Okay. Well, even
Yeah.
that, yeah. So that should be mandatory, and hopefully it will be. But, you know, the danger is that the more economies open up and the more transfer of people is allowed, then clearly the more infections we're going to get. It's just mathematics. So I hope it doesn't get too big, but, you know.
To be honest, ahead of the fall, it's not a good sign that we're getting a spike while the weather still, you know, helps.
Very warm. Yeah.
Yeah. So, you know, I don't know. I'm kind of worried about, you know, what happens during fall. As I've said before, I don't think that they will lock down economies again, no matter what. I think, you know, the measures are going to be more targeted. But irrespective of how targeted they are, unquestionably, you know, another move higher in COVID cases is definitely going to affect economic activity. There is no way around it.
People are going to change their habits again.
Yeah,
you know, they're opening up slowly. Yeah.
And especially in the sad reality of Western economies currently, which the service sector and especially, you know, jobs like people working in restaurants, bars, hospitality, and all that. You know, there are a lot of people working there. You know, that's also going to have a big effect on unemployment.
Absolutely. Okay, what else to talk about? Oh yeah, OPEC have been giving signals that they might be
they actually said that
pulling back production cuts. Yes. There's going to be I think they have a meeting this week, and there's going to be an announcement probably. The oil is dropping a little bit in reaction.
Yeah, to be honest, I was kind of surprised, Stelio, when I saw the news on, I think it was Saturday. You know, I thought that crude would gap down, you know, definitely more than what we've seen happen today. So I think that, you know, I mean, given these news, I think that crude is, you know, holding quite nicely.
Yeah,
actually.
I personally think at these levels we're probably below kind of long-term balancing levels in terms of, you know, how much it costs to produce, etc. Although having said that, the U.S. shale producers have, you know, stopped production quite dramatically. If you look at Baker Hughes rig count, it went from 700 plus, which was the average of the last 3 years, to 180. So they're all stopping production. So they have a big cost base. So
yeah, they were the marginal producer actually.
Exactly. So, you know, with them out of the picture now, and you know, the big production coming from Saudis and, you know, Venezuela.
Yeah, they have a much lower cost.
Yeah, they have much lower. Like Saudis is like double digits, like $10 or something like that, isn't it? The cost, but whatever.
They have a very low cost, yes.
Yeah. So, you know, I would have expected a bigger reaction from oil, but it's not happening yet. You know, we're just going to be monitoring that. But yeah, I expect an announcement this week about production cuts being eased a little bit. And what else? Probably worth mentioning that we have earnings coming up this week and next week. There's some big names reporting earnings, so it's going to be very interesting to see how that goes. Although the market does know that the last 2 or 3 months has been pretty bad due to COVID, and there's been, you know, the production and all that has been greatly reduced. But well, let's see what that brings. Equities are definitely going to be waiting for these numbers, especially the big names that have been pushing the indices higher.
Speaking of the big names, that's a good segue. You know, I had a request from Ziggy, Stelio, to have a look at the FANGs. So this is the FANG index. Just look at this.
It's basically those 5 stocks, right? That are core stocks.
Yeah. Facebook, Apple, Amazon, Netflix, and Google.
5 stocks, yeah.
It's, I mean, believe it or not, from March 13th to today, it's 76% higher.
Yeah,
I mean,
that's crazy.
it's out of this world, right? Yeah. It's unbelievable. it's not only unbelievable that these 5 stocks, which have like a huge share of the index, biggest that ever 5 stocks had, is that it's not only that the move is like amazing, it's also under which scenario it happened. Of course, to be absolutely fair, Netflix, for example, and Amazon, these 2 stocks, in the
They
short term,
benefited from the whole
in the
thing, yeah.
short term, they benefit from this. And I'm saying in the short term because we know very, very well that once you get in a recession and an economic depression, I mean, there is no real chance that they will benefit in the long term. I mean, consumer having less disposable income can't be positive for Netflix or Amazon or whatever else. They did, though, have a huge benefit during COVID. There's no question about it. Now, the same can't be said about Apple and Google. Theoretically speaking, they didn't benefit from COVID per se, and Facebook more of a mixed bag. But given the fact that we wanted to have a look at them, first thing I have to say here is that we're still monitoring here a long-term divergence in the RSI, and I would be careful here because we are actually hitting this very steep ascending channel trendline resistance as we speak. Also, another thing that I noticed is that we're 40% above the 200 daily moving average, which is by far the longest distance this index, the FANG index, ever had from its 200 daily moving average. And as you see, the 50 daily moving average has literally gone vertical. I mean, it's not easy to see like a 50 daily moving average, which isn't a really fast moving average. I mean, it's not a 5 or a 10 or a 20. It's like a 50-day moving average. And
Insane, man. It's insane.
Yeah, it has really gone vertical. So, that tells you all you need to know about it, which is, we've been during the past several years in an environment that, a lot can be said. We can toy around with disputing the definition of a bubble, but even if we want to stay away from that, nobody can doubt that the valuations are extremely rich. That's the most polite way to put it. That valuations are extremely rich.
And, and like Blake said,
yeah,
it's very difficult to buy here because it's so overbought and so rich, but it's very difficult to sell it either because it just keeps going.
Exactly. For example, as Tesla, I mean, how I don't understand people that are selling Tesla for one reason only. There is absolutely no logic behind this move and Tesla's current valuation. So, when a stock has already made such a parabolic move, which has, no fundamental basis whatsoever, no matter how you look at it, it's just a reminder that at half the price of where Tesla is today, which the fun part is that we were at half price of where we are today
a week ago.
At the end of May. So it was like 1.5 months ago. So
that's when
roughly,
tweeted, right?
Yes, 1.5 months ago, at half the price of the Tesla stock today, Musk himself tweeted that the price is relatively high. I mean,
yeah.
When you have the owner of a company saying, okay, the price is high here, and then the stock doubles in 1.5 months with nothing fundamentally having changed. I mean, how can you short the stock? It makes no sense.
No,
it makes no sense because the move makes no sense. So when the move makes no sense, I mean, why can't it go to 1,800? Why can't it go to 2,000? There's no answer to that. When all logic has gone out of the window, how can you put a target?
Yeah, especially when they have a pretty poor product now and everybody's overtaking them.
And not only that, the market is bidding them like it's the biggest growth company ever existed on the planet, and the company isn't growing. They're not selling more cars. And I don't mean they haven't sold more cars during the 3 months of COVID, which of course it would make sense, but the fact that car companies are so cyclical is why all of the car companies have such a low value, right? Because the market knows how cyclical they are. You know, and of course, as always, we have to invent new arguments. Oh, yeah, they're a growth company, but they're not growing. Yeah, but they're a tech company. Yeah, okay, so I mean, still, but as I said, when there is no logic, that means that $1,500 is equally illogical to $2,000. It's equally illogical to $2,500, right? I mean, I know how this is going to end, but as with Bitcoin, when it was rallying to 20,000, there is no telling where 20,000 is in this case. So the equivalent of Bitcoin 20,000 at that huge move higher, which was clearly at least a short-term bubble, because I remind you that Bitcoin went to 20,000 and then deflated down to 3,000, right? So even if Tesla is to prosper and move forward and whatever, trust me, this is the 20,000 type of Bitcoin run, which is going to have the same fate at some point. I remind you that Amazon did exist during the 2000 bubble. Its price got destroyed, and Amazon kept being there, and it kept expanding, and now it's valued, of course, multiple times what it was back then. But before it came to where it is today, it had to go through a boom and bust phase.
Yeah, it looks like 90%, didn't it? In the
80-90%, something like that, Stelio. Yeah.
Okay.
So I think that the most bullish case scenario with Tesla is that more or less the same thing is going to happen here. And I say the most bullish case scenario about Tesla is because I still have huge doubts of if Tesla can even survive. Actually, the only reason I'm skeptical if Tesla can survive or not, and I'm not like 100% convinced that it cannot, is that the market is actually giving it so much value at the moment that it is very easy for Tesla to draw a lot of money if they're smart enough to have for bad times under the current environment. So the only thing that gives them a good chance of surviving is the fact that the market is so decoupled from reality at the moment, so it gives them the ability with the current valuation to draw a lot of money for future purposes now that everybody's blind to what's happening here. Anyhow, no need to go over more on the Tesla subject, but today has been a very, very slow day having to do with FX. Nothing substantially different than Friday or Thursday in the vast majority of the currency pairs. So it was easy to to spend more time talking about stocks. Having said that, the VIX is still diverging, and that is another thing that you should note here. I mean, the low on the VIX post the huge move lower following the initial lockdowns due to COVID was at June 20th, so almost a month ago. And despite indices pushing higher highs, the VIX has actually refrained from doing so. And in my opinion, 24 to 25 VIX remains a very substantial support zone. And I do think that from a risk-reward perspective, VIX still looks extremely appealing at current levels. As we were saying the exact same thing when we were trading down there. Dale remembers that very clearly, and those of you that are here, we were actually talking with Dale that it was a good opportunity for somebody to buy short-dated VIX calls, and we got that explosive move from like 23.5 up to 44, which happened within the period of like 3-4 days, right? 5 days, whatever it was. So I think it's extremely likely that we're going to see another spike like that sooner rather than later. But once again, I have to say that it might again be very short-lived, right? So you should expect that this environment might go on for a longer period of time, getting this drift higher that happens day in, day out, day in, day out, and then suddenly you'll get a very, very big move lower within 2-3 days, and then the market might go quiet again and start drifting higher. That's because, as we've explained before, there are currently two different forces pulling the market in different directions, and it's not easy to get a resolution out of it, with the exception of the Nasdaq, which clearly is trading in a world of its own. I mean, we keep building potentially reversal formations to only break them and build a potentially reversal formation that's even steeper than the previous one. Of course, we've seen this movie being played before, with the most obvious example being the euphoria run higher that we got near the after the summer actually of 2018. So I do see a lot of resemblances between that period and this period, speaking about the Nasdaq specifically. I'm now tracking a potential ascending wedge here, but it's, as I was saying even all previous week, it's very, very hard to be short, in the sense that technically speaking, there are no real pullbacks, right? And whenever there is like a small pullback, there is immediate buying pressure. Now, Blake and Dale at the beginning, they did cover the precious metals. The only other thing I wanted to talk about here was that keep in mind that we might be testing a resistance area here. There's no doubt about it. And here's the channel. Depends on how you draw this channel. We might be testing resistance at the moment. There it is. Or we might have already broken it. But okay, let's take the the most conservative scenario, which is that we haven't broken resistance yet. But at the same time, keep in mind that we do remain in this ascending channel. We actually, when we in essence flash crashed earlier today to 1820, we did backtest this channel trendline support, and as long as this channel is holding, there is no real reason why you should be looking lower. As I've said multiple times, this is the most ideal environment for precious metals. So it's not really easy to fight that, right? Here is gold as well. I mean, gold had like 2 indecision days, 2 consecutive spinning tops on Thursday and Friday, but those are not reversal candlesticks. They're just indecision candlesticks. And if you remember, I remember specifically, we got that big potential reversal day on Thursday in silver. And I remember specifically saying on Friday that, listen, this candlestick that we got yesterday, potentially looks like a very nice reversal candlestick, but you have to be very, very careful, because look at how many of those attempts in a reversal lower we've had in the recent past. But this market is so strong that it keeps ignoring, short-term reversal signals, and it just, completely ignores them within a couple of days. And this is what happened once again. So, I think you need to be very, very careful. And in my opinion, if you want to do something about these metals, you buy them when they actually pull back. You don't sell them, because it's it's not an easy thing to do, and it shouldn't be under this environment. I mean, if there is one thing that makes sense in the markets at the moment, fundamentally speaking, I mean, if you're looking for some fundamental basis about something, if there's one thing that makes sense, is that monetary metals are bid, right? If there is one thing that makes sense, that's it. Now, having to do with the rest, and speaking about
Steve, can I see your chart on notes and yields? We haven't talked about it lately. It's
absolutely
really a tough call.
So here's the 10-year Treasury.
It's like a EKG of a dead man.
Yeah, But, you know, does this
And
look
there's a
bearish to
little
you?
heartbeat every 2
Yeah, but
months.
does this look bearish to you in any way? Because it doesn't
No,
look bearish to me.
it
Yeah.
looks like it's not a market anymore.
No, it's not. It clearly isn't. I mean, if you ignore these like 4 or 5 days, so if you ignore this very
That's what
short
I mean.
period of time,
Yeah.
we've really spent, I mean, the past
3 or 4
4
months.
months,
Yeah. Since
out of 4 months,
I've never
yeah,
seen the notes be
yeah, me too.
in my career, and
I
I'm
mean,
even older
the
than
vast
you.
majority of the days, it's just not moving. I mean, you're checking the screen to see if
Yeah,
it's
I
actually
don't even
working.
look at TLT anymore because you know, it used to be a good trading instrument, and
Yeah.
now it's just, you know, it's like watching paint dry most of the time. You have to make an appointment to get a trade off.
And this is one, not the only, but this is one of the reasons why watching USD yen is like watching paint dry, right?
Yeah, that's a good point.
Yeah. So, I mean, you know, don't expect USD yen to really do anything. I mean,
They took a lot. They took a lot of markets away from us with this
oh yeah,
intervention.
absolutely, absolutely. They've really ruined a very big part of the financial markets.
Because I mean, the bond market dwarfs the stock market.
Yeah, absolutely. That's absolutely right. So they've in essence destroyed a huge part of the credit markets. They've they've in essence this way trapped the dollar pairs, many of the dollar pairs, and especially you know, USD yen, because to be fair, even the dollar index, which is like dripping lower, I mean, you would expect to see a bigger movement from the dollar index with what's happening,
Yeah, I
and we
told
don't.
Blake, you know, 100-point range in last month.
Yeah, it's abysmal. It's abysmal. Regardless,
Maybe 200.
I don't believe that this is like a permanent situation. I do believe that the market is currently numb because of all the intervention, in combination with the fact that, you know, we know very well that usually summertime is not a period for trends, right? I
That
mean,
too. We're in
yeah,
the dog days. Yeah.
if there is a period that in essence benefits range trading and indecision, it's the summer, and we're currently, you know, exactly in the middle of the summer. So, you know, you have to put that in the equation as well. So I think we need to remain a little bit more patient, and as you said, you know, better than anybody could put it, you know, if you want to be there for the good times, you also have to be there for the bad times, right? So if you want to be there for the interesting times, you have to be there for the boring times as well. And it is what it is. The Tesla bubble is going to pop, says Emmanuel, just a matter of time. But I want to ask a question. Is the market pricing in that the SpaceX success is going to spill over into Tesla? I do listen. This is a market, and you know something, Emmanuel, I know it's going to sound stupid to you. You know that there's been, prior to the NASA SpaceX operation, like what was it, a month and a half ago, I was really thinking for a couple of days that I should buy Tesla calls. And the only reason I did consider that is exactly what you're writing, because I thought to myself that this is a market that is purely moving on sentiment now. So I thought that since the vast majority of the people that are bidding up Tesla in that valuation, because obviously since then the valuation has become even, you know, more crazy, are doing that for mostly for sentimental reasons, right? I mean, they're not acting on fundamental principles or whatever else. It's just, oh, you know, this is amazing. Elon Musk is a great guy. He's cool. You know, this thing is going to go to the moon and whatever else. So I thought to myself, prior to the launch, you know, the vast majority of the chances is that the launch is going to, you know, go well, because, you know, let's be honest. I mean, you know, they really, whatever has to do with space flights. I mean, there's huge due diligence, etc. So, the vast majority of the chances was that, that would be fine. And I thought to myself that, all these people that are buying Tesla are going to be so enthusiastic, they're going to buy more Tesla following a successful mission. But I didn't do it. So, is it kudos to me for thinking about it, but not going through with it? Obviously not. But it crossed my mind. Okay. So basically, I agree with your premise. Yeah, it did play a role. I do agree with you. Anyhow, we'll cover more in the chat room for whoever is there, and the rest tomorrow. So let's see. You really introduced him in a way that I want to try to find the time to listen to the interview. So why don't you?
Yeah, you should. In fact, you have to bring a note from your mom if you don't. So Thomas or Tomas, I'm trying to. You're unmuted. I'm asking you to unmute, and then we'll get you to share your screen with us today. Thank you so much for coming to FACE. Can you hear me? You have to unmute, go to the drop-down menu on where that microphone is, and decide what type of audio you're going to use.
Hear me now?
Got you.
Good.
Is it correct? Help me with your first name.
Well,
Tomas?
it's Thomas in English.
Tomas. Okay, thank you so much, Tomas, for joining us today.
Are you Finnish, Thomas?
Yes, I'm Finnish. Yeah.
Where are you from, mate? In Finland, I mean.
Helsinki.
Ah, you're from Helsinki. Okay. Yeah, I have.
Okay.
I have friends from Helsinki and Lappeenranta.
Oh, good. Lappeenranta too. Nice.
So they guessed you were from Finland, Thomas. And if you want to share your screen, there's a green drop-down, a green box that says share screen. And I've already warned listeners and attendees that if they don't want to hear about what could be some negative outcomes to the position that we're in the global economy and COVID and debt and everything, that they should mute us, because you're going to give us that side of the coin. I went to your site and I read some of your stuff, so I'm interested in hearing what you have to say today. But before we do that, can you just give our viewers and me a little bit about your background and how you got started in the industry, and what led you into this business?
Okay, so yeah, well, I did my master's some years back, but actually how I got interested in crisis was that Finland had a big banking crisis in the early 1990s. I was a teenager back then, and they are basically my first memories of an economic crisis. Then I did my PhD on basically studying the relationship between income inequality and economic growth. But the 2008 crisis hit kind of in the middle of my dissertation, so I switched, or I added also economic crisis on my research agenda. And then in early 2012, or actually late 2011, we found the GNS economics, whose original aim was to estimate, to apply the empirical methods we had developed to forecast the path of the economy, but also to assess the risks of the global economy.
Okay.
And so I worked for both in the academia and the firm for 5 years, and then now I'm full time with the firm, even though I hold the position of adjunct professor of economics in the University of Helsinki. But that's basically the short version of my background.
So, a professor once asked me, Thomas, what is worse, ignorance or apathy? And my answer was, I don't know and I don't care.
Yeah.
All right. So anyway, I do care a lot about what's happening here and in the markets. And, I'm just surmising that part of your mission is to have people prepared for what you see coming so that they can get through it as best as possible. So you're talking about a collapse, and we've seen this is the third one since 2000 in my view. And why don't we talk about the beginning of the flood? I think that was, and in fact, you were turning bearish before COVID, and
Yes.
and I've brought to people's attention that we're already in a manufacturing recession here in the U.S. before COVID, and
Yes.
the rationale was, well, we could be in a manufacturing recession, but the consumer is strong.
Yes.
And it's a consumer economy, and that's going to carry the day. So I'm going to do my best not to interrupt you. And why don't you tell us what you're seeing in your telescope and then down to your microscope?
Yeah. Okay. Do you see my screen?
Yeah.
Okay.
Yeah. Saying the stages of collapse right
Yeah,
now.
that's basically the, yeah. I come this in a moment, but so yeah, we actually, there's six people, with 6 partners in the GNS economics, and we actually, first time we understood that something is not right was in the beginning of 2017, when we did kind of an in-depth look at the world economy and noticed that many sectors, like the global banking sector, had never recovered from the 2008 crisis. And then we also noticed that most of the growth of the world economy had come from one place, China, and how she had managed to do this was through massive increases in debt. So China, the level of debt has actually grown about 3 times faster than the GDP of China since 2009. And this was
I remember the narrative. I remember the narrative that China was going to pull us out of the Great Recession from 2008, 2009.
And they did.
Then when China's doing poorly, it doesn't matter. But when they're doing okay, they're going to be the savior. So go ahead. I remember that narrative.
That's how it went. And then we kind of noticed there's actually this graph was actually our big kind of revelation. And this shows the bank loans and the balance sheet of shadow banks in China as a percentage of GDP. And as you can see, between 2015 and 2016, there's a massive increase in the shadow bank's balance sheet. Actually, it grew by 3 times in one single year. And this was 2015 was the year when China started to try to deleverage their economy, and it just went bad. So world economy was going slowly into a recession, and Chinese leaders panicked and issued what was probably the biggest credit bonanza in history, and increased the size of the shadow banking sector very massively. And that was the point when we understood that first, China cannot deleverage without crashing her economy. And whenever, and the fact is that you cannot grow debt faster than the economy indefinitely. So there is an end at that road. And China has been very, very innovative of, pushing the kind of the boundaries of that for very long. But if you look at the graph, the situation is just desperate in China. There is it's impossible for them to kind of recover from this. The levels of debt are just so high. And there's actually, I could actually take you to a let me remember what would be a good.
Where did most of that credit go in the shadow banking system? I remember seeing photographs of ghost cities in China.
It went all kinds of those things. There was this the corner wars, the end of China's miracle. This is something I just wanted to show you. Well, actually, most of the debt was issued by the local governments and the government-sponsored enterprises. and it went to them. Well, when the infrastructure projects, housing, all that kind of stuff. And what it did is that, well, this is interesting also, the figure, but what it did, it basically, Chinese economy, the productivity growth of Chinese economies flagged in 2012 and actually started to decline. So their productivity has been declining for 8 years or 7 years. And it makes absolutely no sense. In an economy which is, which is growing, GDP is growing, the productivity should not fall. So what happened is that China pushed the debt into the economy, but it went to less and less productive investments. And of course, when you have less and less productive investments, your ability to pay back the debt declines all the time. So that's a problem. Let's just see, this is kind of a technical figure, but this is if you can see, there's GDP per capita, credit to GDP ratios, and financial crisis. So there's the Asian financial crisis, then there's the Japanese financial crisis, Finnish banking crisis, and the US financial crash, which is also the global financial crisis. And as you can see, compared to the level of GDP per capita, China's debt ratios are really high, and this does not include the shadow banking sector.
Okay.
So that's the kind of the foundation of the whole problems we have. But then we naturally have the problems in the financial sector, and we actually consider that the new global financial crisis started on the 16th of September in 2019, when the repo markets in the US blew up. So that's where everything got started. But then Fed managed to hold that together, and then came to the coronavirus, hit the world economy in February and March, and it was like in the middle of March the utter collapse of the capital markets was basically in the horizon, but yet the Fed and the governments across the world were managed to kind of sustain the financial markets, the highly leveraged financial markets.
How much time did the Fed buy us, Thomas?
Till fall, and I'll get to that.
Okay.
So, and this is what happened. So you got the onset, then there was the counterattack. We envisaged these 5 stages of the crisis in December 2019, before the corona. So, then there was the counterattack. This is the balance sheet of the Fed. We haven't updated it to the latest figures, but it has been really massive. And then we kind of the biggest problem now is twofold. First, there are definitely bankruptcies on the pipeline in the US and in Europe too. And this is the part of the collapse we call as the flood. So it's a flood of corporate bankruptcies, and we see it slowly gaining pace in the US during the summer, hitting in the fall. And but the biggest threat actually to the global economy and the US economy and financial market actually lies in the banking sector of Europe. So,
interesting. Okay.
Yeah,
because you were talking about I think, don't we have an ECB meeting this week? But you talk about August 8th as being a very important date for Europe.
Well, that was the first date, but that's kind of a. Okay, I'll get to that too.
Okay.
But the fact is that the European banking sector has been mishandled from 2009 onwards. So we have very many zombified banks. The profitability of banks is very low. There is very high levels of debt in our corporations, and the balance sheets of our banks are, especially the southern and the Middle European banks, is filled with the toxic assets. And the thing is that everything has been kept afloat by pushing massive amounts of liquidity into the banking sector. But the problem is that there is of course, a limit. How long can you keep banks afloat with that? And now with the Corona crisis has hit especially hard the Italian banking sector, which we expect to be the kind of the ground zero of the new global banking crisis. And the non-performing loans, which just mean loans that the governments cannot, the customers cannot pay back, is going to increase quite heavily even now, and as we speak, basically, and all through the fall. And it's just that we consider that the fall, sometime during the fall, it's impossible to say which month, but at some point during the fall, the European banking crisis will start. And when it starts, it will become global really fast, because we have the biggest concentration of these global systemically important banks. So when the banking crisis here gets going, it will go global and hit the US also very fast. And there are a few issues now to consider here. First was we were referring to the August 5th deadline. It was actually a deadline set by the Germany's constitutional court for the ECB to make a new statement or clarify the QE program that the ECB has been using since 2015. So they demanded that they will show that it is proportionate, so it doesn't affect the fiscal situation of the Eurozone governments too much. And well, the Constitutional Court let the German Parliament as having the final say on that, and they just decided early July that we accept the response of the ECB. So that landmine kind of slide away for now. But the thing is that when we have national constitutional courts that can override the decisions of the European Court of Justice, which had already before deemed the QE program as legal. So this has the fact that the German Constitutional Court challenged the decision of the European Court of Justice, it kind of creates a situation where national parliaments and national courts can override the institutions of the EU. And this is an interesting thing with going into the future. But the bigger...
Let me ask you this, with the possible outcome that you're looking for is, what fiat currency is going to take it on the chin harder, US dollar or the euro?
The euro, because there's the risk of a complete breakup of the Eurozone, which means that there will not be euro anymore. And the thing is now, the meeting that is now held on the 17th and 18th, when the EU leaders are trying to get together and find a solution for the Corona Fund proposed by the European Commission. It's basically a bailout package for Italy. And if for some reason that does not go through, the problems are going to multiply really fast in the Eurozone and in Italy. And the thing is that if Italy leaves the Eurozone, the ECB holds a very large chunk of her bonds. And also there are the target 2 imbalances. So Italy basically owes the rest of the Europe a lot. And if she leaves the Eurozone, she will most likely default on those. So we would have the capital of the ECB would be gone. There would be massive losses across the spectrum of countries in the Eurozone. And this can start a process where the whole Eurozone unravels. And this is a serious risk that any FX market investor needs to acknowledge, that let's say within a period of 2 to 3 years, they may not be euro anymore.
Okay.
And that's some serious stuff. If you consider that would be the biggest kind of biggest shock to ever hit the modern capital markets, basically.
Bigger than COVID.
Bigger than COVID, for sure. But if there's a bad second wave in the COVID, as it looks rather possible, then it will initiate this process rather certainly.
Yeah, so it's more of a catalyst, and the symptoms have been there for decades.
Yes.
And And this is what could push everything over the edge, is what happens in Europe.
Yeah.
So one of our viewers says it won't happen. ECB is determined to support the euro. So what do you say to him?
Well, yeah, for sure. Yeah, ECB is determined now to support the euro. But this is a political question, and the ECB cannot capitalize banks. So when the banking crisis gets going in any of the countries, we have several, it's not Italy, it's Spain, it's Portugal, it's Greece. There are situations when a government has to consider how it can keep her banks afloat, to recapitalize them. And for that, the country may need to issue her own currency, which would basically mean an exit from the Eurozone. And this is the situation. How the Eurozone develops is not in the hands of the ECB, it's in the hands of the national governments, basically the people of Europe. So this is a risk many do not understand. It's a political risk. And the thing is that if you look at history of monetary unions, they have survived as long as there has been political will to support further integration. And that is starting to be rather fragile in the Eurozone. And if it's likely that we have a severe recession in the fall, and the polls in Italy are turning against euro membership, or even the members of the European Union. And if that happens, the pressure for the Italian government to leave will start to mount. And there is actually the head of the Eurasia group of has actually said that this is the whole Corona fund is a kind of a what's the word? It's a bribe to Italy.
Oh, I see.
Yeah,
Okay.
a bribe to Italy to stay in the euro. And I think that's the best description of it all. And so the situation politically and economically in the Eurozone is very fragile. It may look as solid on the outside, but in the inside there are several massive strains building, especially in the northern countries, including Finland. While our government is very supportive of the plans of the EU, the people are starting to rise against, and even some notable analysts and economists, including also myself, have raised their voices that we cannot go into this Corona fund because it's basically a path to a federal union. So if we want to go to a federal union, we need to have referendums and all that kind of stuff. And this is a kind of a backdoor way going into a federal union without asking the people, and it's really dangerous. So there is a backlash coming, and it may all come to a head in August and September. And then if that would happen, you know, Finland, if the Corona fund falls, doesn't go through, then October, November would be really interesting.
I'll throw into that, potential second waves in COVID and U.S. instability into an election.
Yeah.
Does that play into it at all? Or the U.S. is kind of a bystander that ends up being collateral damage. In 2008, we were the trigger, and now we're collateral damage from what happens in Europe.
That might be very well the case. So, you have one problem. Well, you have two problems. The political landscape is really divided. And then the financial sector or the financial markets are highly leveraged, extremely highly leveraged.
Can't the Fed come in and bail out Italy? They've tried it with everyone else. Maybe the U.S. Fed. Can't they? Won't Powell try it? I don't know.
I don't know. I don't know. He could even try. He seems like very determined not to, stop everything of this crisis from happening. But now, this is a political question in Europe, and there's nothing central bankers can do. Well, they can just try to keep the interest rates of the sovereign bonds low, but that's what they're already doing. But this is more. This is more. This is when the banking crisis gets going. It's a whole different ballgame.
All right. So how are you telling your readers, your clients, and yourself to prepare for this? Just don't wait to buy gold and wait, have some cash, be away from major population centers. What's your what's your game plan?
Well, we have advised our clients to look in Europe, to look both in north and the very center. So Switzerland she has always been a safe haven, but then also Nordic countries, especially Finland, are rather stable. So you need to consider not just we have been saying that gold should be a very high proportion of your portfolio now, but you should also, and it should be physical gold, and you should just look very carefully where you store it. And in Europe, the thing is that when the Eurozone starts to unravel, there will be capital controls. So while there would be a very good buying opportunities of the depressed prices, you may not be able to do that if you don't have money in that country. So we have also said that you should keep money in the country you are going to buy when the crisis truly hits. So the thing here is to remember is that like the Great Depression in the US, this crisis will also create a buying opportunity of a lifetime. Everything will be on sale.
Even gold?
And well, not gold. Gold is a safe haven. It will probably go through the roof. So
okay.
Yeah, gold
right.
should be there. So yeah, the good.
So you're talking about equities and financial assets.
Financial assets, real assets also. They will like when Finland had the 1990s banking crisis, our housing prices dropped by 50% in 2 years.
Okay. Could that happen again? Real estate take it on the chin?
Sure. Yeah, for sure, everywhere.
Globally?
And when you were talking about the U.S. consumer, if you look at the unemployment figures in the U.S. currently, that the consumer is not there anymore. So you are in for a rough ride in the fall too, even without the European banking crisis. But the thing is that if you combine the situation, the fragile economy of China, the fragile financial markets of the U.S., and the fragile banking sector and the political landscape of Eurozone, you get the ingredients of a perfect storm, a complete collapse of the financial order, and that's what we are afraid of. Well,
okay, will there be a reset and a new reserve currency?
That could also happen. We don't know what will happen. Well, of course, the Eurozone countries will go back to their own currencies, and there might be an effort, for example, to the IMF to introduce the currency
SCR,
special drawing rights. Yeah, but there will be interesting propositions coming through. That's for sure. But the global elite, if you may, they will try to keep their grip at any cost. Okay. So there will be something very strange also probably being proposed.
Okay, I have 2 more questions for you to wrap it with. Do you have a view on crypto, on Bitcoin?
Yeah, the crypto and Bitcoin, they are the things of the future, but there's a problem that we don't know how good they behave in an economic crisis.
Right.
We
got a little taste of it.
What?
We had a little preview of it in March.
Yeah, that's true, and we haven't really analyzed it through, but the thing is that we worry that is there going to be enough liquidity in the crypto market, and also there is the possibility of global ban of cryptocurrency. That's unlikely, but it's still in the realms of possibility. It would just mean that cryptos would not vanish, but you couldn't use them as you couldn't buy stuff with them. They would be just
okay. And let's wrap it with: do you think the UK will be in a better position because they've already exited?
Yeah, definitely.
Never adopted the euro.
Yeah, they will be. They are the one safe haven we now consider for European customers. Or there are risks, but they are in a much more better place now than the rest of Europe.
It was a pleasure talking to you, Thomas. I really interesting, and I hear the conviction in your voice. And so we have about 3-4 months to get our house in order for the coming fall and winter, right?
Yep, that's the way you should think.
Okay, well, maybe we'll have you back then and see how things are unfolding sometime this fall.
Yeah,
So,
it would be my pleasure. It was really nice talking to you.
yeah, I wish you and all your associates and readers safety and prosperity during these times. And thank you for coming to edify the faith community today, buddy.
Thanks, you too. And talk to you later.
All right.
Yeah.
Okay. All right. Thank you, everyone. Thank you, Thomas. And that's going to be a wrap for us. We'll see everyone tomorrow for Turnaround Tuesday. Good hunting the rest of the day. Adios. And Thomas, thank you very much for being here today with us. And I'm going to get you scheduled for, say, October.
Yeah,
we should be in the middle.
Good. That sounds good.
Okay.
Yeah,
all right, buddy.
Yeah.
And like it or not, you're now my trading warrior brother.
I'm honored.
right.
I'm honored, man.
Okay.
Yeah.
Okay.
Yeah.
See ya. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow.
Yeah.
Adios.